Hello traders, welcome back to my channel. So today I'm going to be making a part 5 in what has been my market structure mini course that I've been doing here on YouTube. If you have not seen the first 4 parts, make sure to check my trading education playlist, and I'm going to put links to them as well in the video description and on the cards in this video. So today we're just going to build off of the last videos and add a new layer of confluence, which I use when it comes to just pure market structure and price action trading. So that means no indicators, purely using just previous swing lows, support, resistance, etc. What we're going to be talking about today is double confirmation entries at support and resistance. Okay, so if we go into our trading screen, this is trading view. Let's just go into a blank screen quickly and just do a very quick recap of the last type of entries we talked about. So we first talked about an entry type, which we call the pullback retest into a broken swing. So that means if we're trending up, and let's say here we had a level of resistance that we break, then we will look to enter on a retest of the previous broken high levels that we have here in order to expect to continue the trend. So that was the first type of setup. Same thing would be on a downtrend as well. Even let's say if we're like trending up, but then we shift market structure down, then we will look to enter on a retest of the previous broken swing level to continue down. So that was the first type of entry we were discussing. The second type of entry, it's the pullback into a gap fill in order to continue with the trend. So in this case, it would be something like this, where we have a market. In this case, this is an uptrend, and you can see we broke below the previous swing high. We pull back, but now the market didn't just retest the swing high. It goes deeper, usually into the last consolidation on the lower time frame before the explosive move up. So we fill in this gap right into the demand block or the consolidation in this case, and then from there we'll take off. The bigger advantage with taking this type of setup is just that your risk reward is going to be tighter, because in this case we have a clear invalidation right below this swing low. So you can see your risk is going to be a lot less than the pullback into a broken swing method. But again, you got to just be on the lookout for both types and see if you're indeed just going to retest a broken swing, or if it looks like you're going to have a deeper gap fill pullback. Then we saw on the lesson number 4, we talked about failed broken swings, breaks, which are pretty much what's also known as breakers, where, for example, we come down, we make a new low, we come up, but instead of rejecting at the previous swing or at the previous supply that broke the swing, we break above. So in this case, we broke below this, but then we come up, and instead of rejecting here and going down, we actually break above the previous swing high or consolidation that caused the move down. And so in this case, we break back above, and then we look to enter on a retest of this. Okay, so that's pretty much the breaker explanation. In this video, what we're going to see is how we can also have a double confirmation when we go into levels. So for example, if you have a market and you have a very clear level of support, and then we go up, when we come down here, rather than just blindly just trying to long a previous support, because this could bounce, but you could get squeezed a lot before we retake this level. What we do is we wait for a double confirmation. And what is that? Well, you can see an example here. I'll show you some examples, long and short. So this is the silver market. This is a daily chart. And here you can see market was trending down. We started forming this range here where price was pretty much consolidating for several months within this range, a clear resistance and a clear support level here. And then once we have this breakout, now we expect this previous resistance to come into support. So this, number one, this will be our broken swing retest. This will be our first pattern where we break out, we come back to test the previous broken swing, and then we bounce. Potentially, we could have come even deeper here, and this would have been our pullback into a gap fill setup, and our invalidation would have been right under here. But as you can see here, we come up and we did break up from this previous broken swing level. We have a little bounce, we come down into it again, and you can see it does hold the second time. But if we want to be a little bit more conservative with our entries and have just a little bit more security, a little bit more confirmation that this is in fact a genuine breakout and we're going to start a new leg higher, what we do is wait for a confirmation either from a broken swing or from a gap filled setup to give us a bounce, and then we wait for a second break, in this case the previous swing high that led to the retest, let that break up here, and now we look to enter into the broken swing that led into the retest here. You see what I mean? So instead of just blindly leaving a limit order here, which as you can see, it could have worked here, but this could have squeezed us even lower before coming up again and taking this level back. So we just wait for a confirmed breakout and then a confirmed hold in this, meaning this breakout was indeed a genuine breakout and it was not just a deviation, meaning we broke out, we come in lower, and then we just stay again back inside of this. This would have been just pretty much a stop run or a fake out. By waiting for the two confirmations, that gives us a lot more, for me, it just gives a lot better sign that this is indeed gonna continue to rally. And then obviously the first obvious target would be this swing low and filling in this gap here. And you can see we've been chopping up here for many days. So this was indeed a very strong resistance. Okay, let's look at an example now of a short entry. This is in Forex in the dollar yen. So what do we see here? Market was coming up. We had this support here. You can see 5 days and 5 days. We tried to break below this red zone and we couldn't. We rallied, we broke this high, market structure is up. And then we have this. We formed this support. We're compressing down here into a descending channel. And then we have this impulsive move down that breaks the market structure down. Now this market structure is down, so now our eyes are set on shorts. So now there's two alternatives, either a pullback into the previous broken swing or a deeper pullback into the gap fill, which in this case, I would have been ready for this to come up here and try to short here with our stop just beyond this. But as you can see, we did have a rejection right in line with the previous broken swing. So now, what do we do for a second confirmation? Well, now I want the low that led into the retest to be broken as well, which you can see on this candle here. And now I look for entries into this low. And as you can see, this is a very nice example where we had first confirmation, we retest the break in market structure and reject. And then second confirmation, this previous swing low that's support here now gets broken. And then this will be our entry. And then as far as our stop loss, well, we would just put it just beyond the up candles or the consolidation that lead to this second break in market structure. And then targets, well, as far as we see here, the first obvious target would have been this swing low that we had right here in this case. Okay, so that's an example of a short. And now let's go look at two more examples on the S&P 500. The first one, I have it on the hourly chart, where both are on the hourly, but I'm going to show you as well how you can also go into your lower time frames in order to refine your entries. This is an example that happened this week in the S&P 500. Well, this video is going to come out in the future, but when I'm recording this just happened last week. I talked about this a lot in my market analysis videos on the S&P. We were consolidating between these levels for many days. Then finally, we had a nice clear breakout. We came back into a broken swing retest. However, I was also watching this level here since we had this gap, so we could have potentially had a deeper pullback, in which case I would have waited for us to then retake this level to look for signs of longs. But as you can see, you had two options here. Just blindly put a limit order around this resistance, which as you can see worked out very well. And you could have put your stop loss just pretty tight here, but you run the risk of just this running down, filling this into a lower gap fill setup. However, we can see that we do have our bounce. So what is our second confirmation now? Well, if I zoom in here, you can see that we had the swing high that led into this second pullback here. They're pretty much the same levels, actually. The swing highs that led into the test of our demand block, into our broken swing resistance, the green line here. We take off, and as soon as this candle closes, sorry, let me use an actual arrow. As soon as that candle closes through this level, that's our confirmation that now we broke this swing high. And now we look for entries back into this broken swing level, and our stop loss would go just beyond the low that caused, in this case, the move up that broke the structure. And then we just go on from there. So this is a really nice example. And then over here, this just happened as well today. Let me take this off the daily because we're actually going to go into a lower time frame for this. So you can see here, this was all because of CPI. This is a very messy price action because we had the inflation numbers coming out, which caused a lot of volatility. So I don't really trade in those environments. So just what I'm focusing on now here is this. We had this breakdown here, support, price came up, and you can see this was a breaker setup. We had this basically supply here. We broke below, we came up, rejected, but then we came up and just blew through this level. So now Instead of looking for shorts, now we're looking for pullback longs. I marked off here. This is the daily order block, the demand block, basically the last move down that led to this move up that broke market structure to the upside. And now we come back, and you can see right here, we actually had a gap fill pullback. We did not bounce at the broken swing, but we came down lower into this gap fill, into the last block of demand pre-breakout. And so here's our first confirmation when we bounce off of this level. So rather than just blindly leave a limit order here, which again, when these setups work, obviously, if you don't wait for the second confirmation, your entry is going to be better because you're going to get in longer. You're going to get long at a lower level, and you're going to have a tighter stop. Not a tighter stop, because actually you can tighten your stop on the second entry. But you're going to have a better entry at a lower level. But you run the risk of leaving a limit order, and this could just perfectly just go like this and blast through and just stop you out. So if you want to wait for that second confirmation, now here I can go on a lower time frame. So we have the level marked here, and let's go into a 5-minute chart. And this is how I do a lot of my trading when I do day trading on the shorter time frames, and I go over this as well in my trading courses. But I'll use higher time frame levels and then look for entries or confirmations on the lower time frame. So this whole box here in gray, that is our daily demand block. You can see all this previous resistances that we had on the 5-minute chart. We come right into this level, we bounce, and then right here we have on the lower time frame the swing high that led to the second retest lower into this level. We bounce up, and then we break above this swing high. So as soon as we have these candles here closing above, now I look for entries on a pullback into this broken swing level, and you can see we get it right over here, and then the market just takes off from there. And you can even see here also, this little level was, it barely missed it, but we almost tested over there too. And then in this case, from the lower time frame, this is clearly the target right into this gap fill, into this consolidation that we had here. But you can see how we have the higher time frame support level. We wait for a bounce from it, and then we wait for a second we wait for a market structure break up on the lower time frames, in this case from this swing high, break above, and then retest, and then we just start going into our first trouble area or our first target. Okay, but that's pretty much how this pattern works. So if I'm going to draw it out for you, just imagine we have a market coming into a resistance, we break out, then we start coming down, we retest that level, but rather than just leaving a blind limit order into here or down into the gap fill setup over here, we wait to have an actual breakout, and then we look for this. We look for an entry once we have first bounce confirmed, and then second break confirmed into the previous swing high that led into the retest, and then that's our signal to get in. And then we would just put our stop loss just here beyond the low from the retest, into the swing here or the gap fill, etc. We just put our stop loss beyond this last low, and then we just go from there. And exactly the same setup, just in reverse, would apply, if we're looking into short setups. Okay, so that's pretty much for the video, guys. Hope you enjoyed it. Again, if I have any other additions into this market structure trading course series, I'll add them to it. Make sure to check out all the other 4 videos in the series in order, ideally, so that you can build from one concept into the next. If you want more in-depth details into my trading strategies, then definitely go ahead and check all my trading courses and bundles down here. Check out my website. Don't forget to subscribe, hit the thumbs up, and turn notifications on. I post daily content here on my channel, and that's pretty much it. See you guys in the next video. Take care.